Another commonly used form to incentivize employees in LLCs are what are called profits interests. And a profits interest is like it sounds. It's a right to receive profits from the company's either operations or a sale of the company at exit, or potentially both. So profits interests are commonly given in LLCs in lots of different industries. For example, in the venture capital fund or private equity fund, you might have heard the term carried interest or carry. And carried interest or carry is also known as a profits interest. A profits interest refers to, some terminology that people find in the tax code and IRS guidance about different kinds of interest in an LLC. And one benefit or reason why people use profits interest is because if they're structured properly and they don't entitle anyone to actually anything on the day of the grant, then they're not taxable at the grant date. So unlike a capital interest, which is the right to, actually own a piece of the LLC and all of its distributions on day one, a profits interest structured properly only entitles someone to future profits, either from operations or from other things. So that's kind of the main difference. Profits interest can be done on a vesting basis, meaning that they don't have to all be vested up at the one time that they're issued, or they can be issued fully vested at grant. So you have flexibility there. Investing, can either be set up so that the company buys back those profits interests at some kind of predetermined price, like what they were issued at, or it could be just done on a forfeiture basis. But profits interests do give a lot of flexibility. Now, keep in mind, if you do give employees a profits interest, they are no longer really considered W-2 employees if the LLC is taxed as a partnership. So that means they become partners. They're issued a K-1 every year. They can't do their regular tax refund filings. They have to wait for the company to give them their K-1. They may have certain rights to get information about the company, including financial information, depending on the Delaware or the LLC statute that's involved in your particular state or jurisdiction. And it's caused some issues for clients of ours in the past that didn't really want to take away someone's kind of W-2 employee status and make them partners getting a K-1, because for some people that kind of complicates their tax filing picture. It also ironically stresses out some employees to all of a sudden, not be able to use TurboTax or claim their refund and have to go and find an accountant and talk to them, etc. So for lots of reasons, profits interests are not always used unless people really are in the nature of a true, kind of high-level management partner in our experience. Now, there are other strategies to deal with some of the voting and information thing that usually come with a profits interest grant. You get into some more complexity, but certainly something that we can help you with depending on your particular facts and circumstances. But profits interests are one possibility for an LLC looking to incentivize its employees. If you have any questions, reach out to us, get in touch. If you like this content, please like and subscribe, and link to the content if you really like it. But we appreciate your support and hope to hear from you soon. Thanks.